Hey everybody, welcome to the first ever Shark Scrapper Live. It is great to see everybody. JR Cat, Scrapping Irish, Ralph, well, Ralph I think went off to dinner. See you scrapping. Cruiser, welcome everybody. I hope you can hear me okay. Let me know if you are able to hear me okay. Because this is the first time for me, so I'm still working out some bugs here. Now, who is this live stream for? It is for, of course, anybody that's into scrapping and recycling, but because we're going to be talking about the industry from a little different perspective, it's going to also apply to those folks that stack or invest in silver, gold, those kind of things, and stocks. Yes, I said that nasty word, stocks. We'll get more on that here in a little bit. All right, now, today's live stream is brought to you by me, because I don't have any sponsors, right? But if anybody is in there listening and you haven't put your name up, in the comments section, and you happen to represent one of those really big companies, I'll be happy to chat with you. You can reach out to me at sharkscrapper@gmail.com. Of course, all of you can anyway, but most of you know that already. All right, and also because this is our first live stream, just a couple of guidelines, right? We're going to be very respectful for each other. We're going to be talking about things that go back and forth and those kind of things. So let's just all be really respectful, right? No cussing, no spamming, no trolling. And E-Waste Mike, if you come up on the screen, that means you too. All right. All right, so we're going to sort of follow a flow here that will encompass talking about the precious metals market, talking about the industrial or the consumer type markets like aluminum, copper, those kind of things. We're also going to have sort of a safety tip product thrown in every week, and we're going to be looking at publicly traded companies that operate in and around our world of scrapping. And that should be really interesting for folks, I hope. Then as the year progresses, we will have folks up every now and then to interview and talk stuff and see what's going on. So without further ado, let's dive right in and get on with the gold market. Now, gold, we all talk about what's going on in the gold market, right? And folks like to come up and say, oh, is it going up, going down? I am looking at APMEX's website here. I like APMEX. They're a good place to buy and sell precious metals like silver and gold if you're into it. It's a no drama kind of place, but they've got a lot of great information on their website. Now, this tells you why I don't really like the churn, right? The daily kind of stuff. Because you look at this chart, this is 24 hours. Now, even on a weekend, a holiday weekend, when there shouldn't be much going on, what you end up with is a lot of churn in here. And 0.2% when it's all said and done. Right. So, hey, Copper Buck, thank you very much, man. That's awesome, dude. I appreciate it. All right. So, I don't like to pay attention to the daily churn of things. It just doesn't really give me a lot of information. When you look at something from a weekly perspective, if the website wants to cooperate. Oh, wait a minute. Let's do this. If you look at something from a weekly perspective, you see a little more of the trend that is of interest. So here you can see for the week, we started out back here. We're up at we went up $19.8 or 1% for the week. Now, does that also give us information? Well, it says, yeah, we're going up, right? But if you look at even longer time scales, you get the idea of the trend, and that's going to help you when you decide if you're going to be selling your gold bearing materials. Now, that's important to us. I mean, we all know this, right? We have materials like circuit boards that have gold in them, and that gold price drives what the scrap yards can pay us, indirectly, right? So we want the gold price to go up, and when they're trending up over longer periods of time, the yards are more likely to increase their prices because the refiners are going to be offering more. All right. So now the other thing that I like to look at, I always have to look at this long-term trend, and this, if you follow gold at all, you know what's going on here, right? You've seen all this. We look at the long-term trend here. It was pretty flat in the 90s, and then it starts climbing, early in this decade, and then we had this plateau here. Then we had this really weird dip that went on. I wonder what happened here. We get another nice plateau here. But this is the thing that I want to point out about these plateaus. All right. You see this plateau in the gold price here, and this plateau in the gold price here. And this more recent plateau is a little higher than this more recent plateau. So when you are thinking about holding your material for long-term kind of investments, these sort of tell you what are the peaks that you can expect to see, and should you be waiting around until you start to see this gold sort of plateau. Now, of course, right here at the end of the period, we see the current rise in the gold market. And that's why folks like BoardSort and Chris, I see you popped in here, can start paying us more for that material. And, it has nothing to do with the yard saying, oh, it's, Monday people are going to show up, we're going to take the prices up or take the prices down. Their buyers are working with the folks that they're selling their material to. They're trying to determine how they're going to make their money. So they're pricing according to who they're going to be able to sell stuff off to. All right, silver is also another one of those very interesting markets that we all like. Some people are really into stacking silver, but again, if you look at this 24-hour market, you really don't get a whole lot of information here. Silver down 0.29%. Okay, but it was the weekend, a holiday weekend, so hey, again, don't put a whole lot into that. We look at the week, and again, we see a bunch of churn going on here for the week, and you just don't see a whole lot. I mean, it went up 0.4%, right? But what's that really telling us? It's a holiday. So again, you're not going to make any decisions on your buying and stuff with silver. JR Cat, is that a? Oh, that's. I thought that was throwing up, like you didn't like silver. So again, let's take a look at the longer term trend with silver here. Let's look at. So when we look at the year for silver, those of us that were paying attention and might do some work in silver, we had, of course, this plateau, and then it has fallen off here since April, May timeframe. We've had sort of a steady downtrend, and then it started picking up again. So again, it's not a great deal, 5%, right? Silver, is kind of one of those weird markets. It doesn't trend exactly with gold, but they are kind of related to each other. In fact, if you go to as far back as APMEX tracks this, you have a similar pattern to what we saw with gold. We had the flat, slightly increasing period late in the 90s going into the early 2000s. Then we had the peaks building up here, and then we had this little bowl that went on, and then we have our current kind of peak thing here. Now, this is where things get fun, because if you do this kind of stuff, if you're looking at these prices, you can't help but notice when you get this kind of peak thing going on here, right? And, one of the things that I was doing, and it's not that I was smarter than anybody else, God knows I wasn't, I was buying silver in here when it was like, in the teens and 20s. And as the market started climbing, and then I sort of held off buying silver. And as it got into the high 40s, I was like, yeah, it's probably time to sell. And so just by pure luck, I sold half my silver to a guy that paid $50 an ounce for it at the peak of this market. And by selling half of it, that meant that everything else that I had was free, right? So at that point, then I just waited around until I saw the prices get back down towards the 20s and start buying silver again, right? So, we start to see it coming up again. It's kind of flexing around here. But the question becomes, if you are a silver stacker, at what point do you sell off some of your silver? And so much of this really depends on why you are buying silver and gold in the first place. So, first question of the day, why are you buying silver and gold out there? Do you buy it as a hedge against inflation? Do you buy it because you believe that fiat currencies are going to fail? Or do you buy it just because, it's cool and you like it and it's pretty? And what kind are you buying? Are you buying things like, silver dollars and Britannias, or are you buying just plain rounds? All right, now I'm looking for who's buying silver, gold. Scrapping Irish, it wasn't me who bought the silver. Welcome aboard, Sweden. Great to see you, Petter. Nobody's buying gold and silver in this audience? Come on. I thought some of you might be. No? All right. Well, in that case, let's get right over to the industrial metals. Because industrial metals are more interesting because that drives the day-to-day stuff that we're doing, right? We buy a lot, we collect and sell a bunch of aluminum and copper because that's what we find a lot, right? So we're going to jump right over here to look at the aluminum market. Well, we're going to try to anyway. Come on, do your buttons right. All right, now you notice that I went to KITCO on this one. I did that for two reasons. I like their historical charts. Hey, Robert, how you doing? Urban Prospector, welcome aboard. I actually have used both KITCO and APMEX for buying silver and gold when I do buy it and when I sell it. And it's really good to be able to play one against the other, right? Because one can offer me better prices than the other sometimes. They're both good companies. I like working with both of them. And no, I'm not sponsored by any one of them. They just happen to be companies that I work with. But I like these historical charts on KITCO for things like the base metals, the industrial metals, because it just gives me another perspective on what's going on. So here we see aluminum, and we're looking at the 5-year aluminum. The KITCO site has 1 year and 6 month, and those kind of charts for you to look at. But if we look at this 5-year, this to me is kind of this is the kind of stuff that I like doing. We see here that aluminum was actually sort of on a downward trend all the way going into COVID in the first place. And then COVID just didn't help things, right? When stuff started shutting down and, they weren't using a lot of the aluminum. Then we see the prices start to move back up again as the world starts opening up and stuff gets back online. Now, again, I don't get too excited about all these spikes and peaks and things. I'm not a day trader. So oh, hey, Gaz, I see your comment there about gold, silver. You know what? We'll do that on another live stream sometime. How about that? because I understand that you know, some folks like to look at that. So yeah, we can talk about that on another live stream. So we saw that aluminum, you know, was kind of climbing, and then here we've got what's going on. You know, it was leading into the summer as the world opened up and prices started dropping again, and now it's slowly picking up again. Now, because aluminum and copper are actually driven more by consumption, we have some interesting things that we can look at. And this is one of the things I like about KITCO. We can go down to what's called the London Metal Exchange Aluminum Warehouse Stocks. And what's really cool about this is, hey, Copper King, great to see you again, man. What's cool about this is this tells us sort of the inventory of aluminum and industrial metals that are out there for the plants and, you know, and industry. And you know, it's got this cool kind of sine wave looking kind of thing here, ups and downs as stuff gets used, and they burn down stock, and then they back up stock, and then they take out stock. But what you see is that throughout this period, there's sort of this level that they don't want to go below that inventory. All right. Well, right here we get the, right, this is right around November, December 2019 when COVID starts to come in. And what you see is this, you know, you see the inventories climb, they fall out again, but they're generally climbing after COVID comes in. And that would make a lot of sense, right? The industry isn't functioning, and you're not burning off a lot of that inventory, you know, so there's some ordering, there's not. We had all those supply chain issues. And then we see that the aluminum inventory starts to drop off again. And so for our perspective, if you're looking at things like the inventory, you kind of think that, well, as the inventory is dropping off, maybe the prices are going to start going up at some point because, you know, you don't have as much there, right? So let's go back and take a look. We got the inventory starts dropping off in May of 21. So let's go back up here and look at the prices in May of 21. And here, let's see, May, October, March, April, May of 21. So right here, and yes, we see the prices start going up as the inventories are dropping. And what happens here, March of 22, is when we have this peak. So let's go back down and look at what's happening with the inventories at March of 22. March of 22. February, March of 22, inventories are still dropping. So we still got this drop in inventory going all the way to September of 22. And, you know, I think that's a lot of catch up going on, right? But here's the other thing. Look at this. The industry, whoever they are, blew right past this level that they used to sort of bounce off of and just kept eating up the inventory in aluminum. All right. And now you see inventory starting to pick up again a little bit here, but boy, they've got to do a lot of recovery with the aluminum stocks before they get to where they used to be. And so I think that what that means for us in this scrapping business is, oops, I hate when that happens. I think what that means is that we're going to continue to see our prices in aluminum on a slow rise. So you all talk to your scrap yards, you talk to the buyers there on a regular basis. You know, what are they telling you about prices for aluminum? I think we're going to continue to see slow rises. Now, remember, there's still this churn going on all the time, right? But hopefully we're going to see through the year, the price sort of coming up, especially as they start replenishing that inventory. And we'll watch the inventory, because if they get back above that level that they used to hold at, things may change for pricing. All right, now, copper. Come on, let's go talk about copper. Copper is what we all love, don't we? You know, feel free to chime in down in the comment section with your thoughts on what I'm talking about here. You know, this is me looking at first order kind of influences on pricing of the stuff that we like. So, you know, I'd like to hear what your thoughts are and what are you doing as you pay attention to things like the pricing and those kind of things. Scrapping Irish brings up a good point. Don't forget that Ukraine and Russia were big aluminum exporters. Very good point, Irish. You know what? In fact, let's take a look at something here. Before we jump over to copper, sorry, Cruiser, didn't mean to tease you there. Before we jump over to copper, let's go down here and take a look at these inventory levels because, you know, maybe that's also why the inventory levels kept dropping, right? Because Russia and Ukraine war, so you weren't getting as much aluminum playing in. And yeah, Chris brings up the China tariffs also influencing it. So, you know, there's all these things that are influencing what's going on with this stuff. So I don't know, maybe if China and Ukraine can start you know, if they can get that war over, they can start producing aluminum, but then they're going to need a lot of aluminum to rebuild. So that could help fuel prices too. Yeah. So let's see, what do we got here? JR Cat, just watch the fuel prices. The prices go down, so does the scrap. You know, JR Cat, we're going to look at that in another live stream because that's a real good point. A lot of people talk about that, you know, and the correlation of the prices with fuel. In fact, you know what, JR Cat, let's do this real quick. Here, let's go back to gold, and let's look at the 5-year gold price, and let's look at what the 5-year gold price did with the dollar and with crude oil. This is one of the things I love about this APMEX site, is being able to pull up these comparisons right away. So you've got gold is this gold line, right? And then blue is the US dollar, and then black is crude oil. Funny how that turned out, right? And so what you can see is crude oil prices bouncing, you know, moving around the dollar, and not exactly correlated to what is going on with the gold prices. There's some loose correlation there, but you know, I had for a long time believed that you watch the oil prices and that tells you what's going on with gold prices. And in sort of a first order magnitude, there's some of that, but there's so many other influences right now playing on oil and oil prices that it's hard to use that as a direct correlation anymore, at least based on, you know, what I'm seeing here in the charts. It's kind of a little bit difficult to keep that correlation. So yeah, Chris, notice as oil rises, gold drops. Yeah, right in here. Oil's going up, gold's going down. Good point. Real good point, Chris. All right. So, all right, I'm going back to copper now. Going back to copper. I know, we're going back to copper. Copper, historical charts. There you go, Cruiser. I hope you're happy. I hope you're happy now. Here we go, 5-year. Here's an advertisement for Facebook. Not interested. Okay, so copper, 5-year spot price. This is going to be really fun watching how this worked relative to the dreaded COVID. So copper was slowly going down, and then we get to COVID right around here, right? COVID starts around December 2019 is when we start seeing the COVID start to come in, right? You see some increase in the copper prices, but then it drops as the world sort of closes down. Cruiser's so happy we're talking about copper. And so the spot price just plummets. But then you've got, as the world then starts getting its act together and it starts opening up again, we see the copper prices start climbing rapidly because, well, we're using a lot of copper now, right? So we're back in the game. The world is using a lot of copper, and we've got a drop, and then it's back up again, and then it's a big drop here. So let's have some fun and go look at the copper inventories and see what the copper inventories are telling us relative to prices as well, right? So same thing, London Metal Exchange, right? London Metal Exchange. Whoa, this is very different than aluminum. I mean, really different, right? We've still got this sinusoidal pattern going on here, but there's a much more pronounced signal inside of this. And this is one of the things that I've been watching here. If you look at the peaks, let's connect the peaks of the top of the copper sines here, copper sine wave, and you see it going down, right? If you look at the bottoms of you see it going down, right? So what this is sort of saying here is that the inventory of copper is generally dropping. It's been generally dropping since January of 2018. We're using copper faster than they're putting it in the products. I mean, faster than they're putting it in the warehouses. Chris, all CPUs are purchased as scrap except for, you're responding to somebody's question. Sorry about that. Okay, so what we see is copper's dropping here, right? And that's the copper inventories. And so again, we're thinking, well, copper inventories are dropping, then prices probably should be going up, right? Or have a trend to go up. Well, of course, we know that COVID had an influence in copper. Here's December 2019. That's when COVID came in, and you see the inventory levels pick up as nothing's going on. So they're just, copper stacking up as best, stocking up. Of course, they're not making a lot of copper because the refineries are shut down too. But, there's stuff out there that starts making its way in. And then the world starts opening up and we're consuming copper inventory again. And if we had this downtrend, and if you look here, you see these peaks are going up a little bit. So does that tell us that they're rebuilding the inventory of copper? Well, overall, not really, right? Maybe for a short while, but overall, these peaks are still going down. We're still using copper faster than it's being stocked. Okay, so Chris, I don't mind if you do some business in there, man. That's fine. Right. So we see copper is still, they're using copper, right? So let's see, we should see this in some prices here. Let's go back up and look at copper prices here. 5-year copper price. So we had some stability, a little bit. Again, it depends on how long term you want to look at it. When the world opened up, copper started going back. Oops, sorry, wrong button. When the world opened up, you saw copper prices start to climb back up, and then they crashed, and now they're coming back up again. So, I think it's probably no surprise for all of us that copper prices should start climbing because we saw the inventories are low. We see consumption is picking up again. So later on, Peter, take care, man. We should see copper rising. So what are we going to do? What does that mean for us? And I'd like your thoughts now as we talk about copper, because we got to decide, right? Copper is one of those things that a lot of us will hang on to because it doesn't take up a whole lot of space. and we can, you know, we can keep some of it behind, right? So I'd like to shift over here. We're going to move off of the charts for just a minute, and let's talk about copper. And I'm really glad that Chris is here from Board Sort, because, you know, being a guy that is managing a scrapyard, Chris is, you know, knee deep in this stuff all the time. And you know, my approach to copper is that I hold back about 10% of my inventory. Because I am a very small scrapyard, I need to have cash flow, right? So I have to keep selling stuff. But I do hold back a certain amount, and it's roughly 10% of some things like copper, in the anticipation that the prices are going to rise again. And then I will have an opportunity to sell that strategic reserve for more. But the question becomes, how long do you hold that, and how much are you going to hold? So if we go look back here at this rise in prices, we got to ask ourselves, well, how high is copper going to get? Do we expect that copper is going to get back up here in price? And if so, are we going to wait for that? Or because the world is making copper again and consuming copper again, are we going to look for some sort of price in the middle that we're going to say, okay, it's good enough, I'm going to start selling my copper again? So what are you all doing? Are you going to hold your copper longer, or are you going to, or at what point are you thinking about selling off your copper? And we can go back over here. Let's see. Cruiser Max says, I think that mining output is unable to keep up with demand as well. I agree with you, Cruiser. I think that's what we saw when we were looking at the, here, let's go back over here real quick. So yeah, Cruiser, I think that this is the story when we look at these long-term kind of trends in the copper warehouse stock levels, that the mining part of copper can't keep up with what's happening with the consumption, and you know, that bodes well for us as scrappers, right? Because that means that the copper products that we're bringing in, our insulated copper wire and our number 1 and number 2 copper, should be more valuable as time goes on. All right, let's see. Simon says he's waiting for $11 to $12 a kilo in the spring. Okay, cool. Chris, sophisticated yard management tools allow managers to understand the cost basis. Oh my God, he's using big words. What we paid for the stuff over time of their inventories, which allows us to make calls on when to sell. You know, Chris, I'm glad you brought that up, because this is so important for us when we're, those of us that are more into the selling to the yards than actually running the yard, because it's so hard for us sometimes to understand, well, why did the price go up today and not yesterday? And, you know, did they see me coming, and those kind of things. So, you know, I think it's important that we understand that the scrap yards have some, especially well-established, sophisticated scrap yards, have some pretty good tools that are helping them make these decisions. And us newbies, we haven't quite gotten into those tools yet, right? So a lot of us are still trying to use our brains and look at what's going on in the world around us to kind of make the decisions on how we're going to react to these things. Hey, JCT, great to see you, man. So yeah, and it would be interesting, you know, to kind of to see if there's any tools out there other than us paying attention to these kind of charts to help us, as, you know, more of the consumer that's selling to the larger scrap yards, to help us with our decisions too. All right, Ralph Morick, if copper goes to 10 plus euro a kilogram, I might not melt it, but turn in most of my stock. Okay, all right. You know, Ralph brings up a really important question too, and that is, why are you collecting the metals? You know, Ralph likes to make stuff. He's more of an artist than he is a scrapper, and you know that's a big thing too, right? You know, at some point, you know, you're turning your copper and aluminum and such into stuff, right? Some stuff you're going to give away, some you're going to sell, but it's less about the real price of the material in your case, as much as it is, you know, you've got a bunch of it that you're hanging on to because you're going to make stuff out of it. But if it does get to be pretty valuable, it's like, yeah, well, maybe I should sell it because I'm going to find more, right? So let's see, what do we got here? Oh, thank you, Joni. I'm glad you like the tree. It's I don't know how much longer it's going to be up. You know, we actually did start taking down some of our Christmas decorations today, so it maybe give it another week or so before the trees really start coming down around here. We got 9 of them to take down, so yeah, we're going to be a little bit busy. Okay, so safety tip of the day. Look, you all know, those of you that know me, you know I was in the Navy for 25 years, right? Safety is a huge consideration in the Navy. It's carried over with me as I get into this business. So I want to take advantage of having a live stream to just throw out there, you know, these kind of little safety tips for us. And the first one that I want to talk about is our eyeballs. Okay, you know, they're really important to us. And you just ask anybody who has lost an eye or lost all of their sight, and you know, they're going to tell you that wish I had taken better care of my eyes, right? I really want to encourage everybody to use some sort of eye protection when you're out there scrapping. You know, there's so much to choose from, right? You got the full face shields, you got the safety glasses, you got the goggles that fit up tight against your face. Oh, you're welcome, JCT. Always my honor, not always my pleasure. You know, think about having some safety eyewear available because it's like really important. You know, as the kids would say, it's like really important. And also think about the kind of safety goggles or glasses that you're going to wear, right? Face shields are really good. They're kind of convenient. They don't fog up as much, but it doesn't prevent dust and stuff from getting inside and, you know, getting in your eyes. The same with safety glasses. They don't usually have side protection, so dust and debris can get into the sides. They're really good for direct impact, but you can get the dust in there. So if you're doing something that's really fine, dusty, dirty kind of material flying around, maybe goggles are the way to go. Or Mrs. Shark got me some really cool safety glasses. They're really geeky looking, but they're pretty cool. They got like these little flaps that fold in on the side. So they help a lot. John, squint for safety. Hey man, sometimes I got to squint just to read. You know. Oh, Wayne, man, I'm sorry to hear that. Yeah, that sucks, man, that you lost an eye. That's that I can't even imagine it, right? You know, I'm sorry to hear that. So hey, everybody, really pay attention to your safety. And you know, I tell you, so here's one that I'm really curious about with y'all. Now, a lot of us take apart e-waste and pull computers apart and stuff like that. I got to admit, I don't wear safety goggles. It's my safety glasses when I am taking apart computers. If I've got my reciprocating saw or my grinder going, yeah, I absolutely have eye protection on. But when I'm taking computers apart, yeah, I don't. Do you all wear any kind of eye protection when you're taking computers apart? Because, you know, sometimes, man, I pulled out some wire and had a piece of plastic go whizzing past my cheek or something like that. I'm thinking to myself, yeah, maybe I ought to start putting my safety glasses on. So anyway, curious about you all if you wear safety glasses when you're taking your e-waste apart. Okay, so now it's time to get to what I think is going to be, it's definitely going to be kind of weird for us in this kind of community, right? We're going to look at publicly traded companies that operate in and around this world that we operate in the scrap business. Now, there's a lot of places that you can get information on publicly traded companies, but I use this thing called the Value Line Investment Survey. The reason I use this is because they do not take advertising. All right. This is just nothing but data and analysis of the data with no bias to make an advertiser happy. So really cool information. They make their money through subscription. So they have to keep folks like me happy because trust me, this isn't cheap, but it's great information. All right. Now, I combine that with a trick that I learned, or a process, a method of analyzing companies when I was working on my MBA to help me make some decisions about companies that I'm going to be interested in investing in. But first, you got to understand something. I'm really a boring investor. I mean, I'm boring, right? To me, the scrap market, to me, the stock market is not a place where you're going to go make your millions. It is a place, one of the places that you can go to help protect what you have. If this is really important, you're kind of smart about it, because you can easily lose everything as well. Hey, later on, Joni, take care. Great seeing you here. Thanks for dropping by. Always keep in mind when I'm going to be doing what I'm going to show you here about these companies is that for me, I'm trying to get dividends, and I'm trying to get at least 4% out of my portfolio, so that I'm kind of hedging against inflation. And how do I make sure that a company is kind of safe? Well, to do this, we're going to jump right into today's stock market report. Now, what you see here is a typical Geek Shark spreadsheet for the company Lowe's. Now, I'm going to use this as an example of both companies that operate in and around our world of scrapping. Hey, Grandpa Kevin, welcome into the live stream, but also to show you the way I analyze companies. And don't let all the numbers scare you. Don't worry about it. All I've done is I've taken the numbers out of the hard copy that I got from Value Line, and I put it into a spreadsheet to make it easy for me. Don't let it scare you. Now, Value Line looks back 17 years into a company's history. And so what I do is I look at 17 years of cash flow per share, earnings per share, and dividends per share, right? Now, this is LOW is the ticker symbol for Lowe's, right? LOW. And yeah, their dividend yield is not real good right here at 2.1%, especially on, but that's on $206 per share, right? So, this probably doesn't make my mark for an investment, but Lowe's and Home Depot are, really good companies that we should pay attention to from the perspective of, is more stuff going to end up on the street and out there for us to get, right? Because if Lowe's and Home Depot, the two big competing big box kind of hardware stores in the US, if they're doing well, then that says that homeowners are going out and buying stuff. And that means that they're putting the old stuff out on the street, right? It also means that the small business kind of plumbers and electricians and trades folks that do buy from Home Depot and Lowe's, they're also going to be, getting stuff, and stuff is going to be ending up in our hands. So I like to watch Lowe's and Home Depot, not so much because I'm going to buy stock, because as you'll see, both of them are kind of iffy as far as I'm concerned for a stock investment. But it tells us that the economy is pumping stuff onto the streets for us, right? Which is good. Now, how do I go about deciding who and what I'm going to invest in? And I told you I looked at the cash flow per share, the earnings per share, and the dividends per share. And what I want to see is throughout this 17-year period that is being reported in this newsletter, that the earnings per share, the cash flow per share, the dividends per share go up every year, up every year. I will allow to consider a company that they have a down year or a flat year, but only one. And when it comes to dividends, they cannot have any flat years. I want to see my dividends go up every year, or maybe be flat a year, but I want to see them go up every year. All right. So we're going to focus right now on the dividends here, and we're going to look at this trend of dividends from Lowe's. And what you see is that every year their dividends went up. Here's the dividend per share. Here's the difference, right? So if you look at the difference from 2007 and 2006, it went up by 13 cents a share. All right. So there were no flat years, no down years. I call Lowe's a div 0 because that means that they're qualified for me to consider investing in because they had 0 infractions. Okay. 0 infractions. So, if they were yielding better, I might think about investing in them. And if you want to see what that looks like from a graphical presentation, here you can see, the dividends per share always going up. Now, in this case, we've got Home Depot and Lowe's compared. Here's the Home Depot dividends per share. Here's the Lowe's dividend per share. And you can see that they're both going up. They've had no negative dividend years. And so, in fact, let's go over, we can switch over to Home Depot here. And here you can see Home Depot. Here's Home Depot. Their yield is 2.6. That's what we saw in that graphic. But this is why Home Depot would not be qualified in my methodology, because right here you can see that Home Depot from 07 to 08 they were flat, and then from 08 to 09 they were flat with their dividend per share. So I'm not going to invest in them. They're not qualified for me to even look at, even if they were doing better for their yield. So Home Depot, Lowe's, both of them, they're not bad companies, but I'm not going to invest in them. But let's look at something that might be more interesting as an opportunity. We're going to shift over to what's called the power industry. The power industry is a collection of companies, and what the investment survey does is it bins companies together based on their industries that they're in. The power industry are companies that generate electricity, but they predominantly are alternative energy sources. So there may be some fossil fuel in there, but they're mostly other sources of energy. Now, there's a company here called AES Corporation. Their yield is 2.3%. And so, you say, yeah, 2.3%, that's not something that the shark is interested in. But look at this. Their entry level is only $28. So they haven't been around very long. They just started reporting in 2012. So maybe the shark is going to be interested in buying up some shares of this, sort of getting in on the ground floor in anticipation that they're going to keep improving. So in the short time that they have been reporting, they haven't been out at full 17 years. They remain at div 0. That's kind of got my interest. There's another company that really has my interest in the power industry, and that's called Emera Incorporated. Their stock ticker is EMA.TO. So Cruiser Mac, this should have you interested because .TO tells me that it's traded on a Canadian stock exchange, the Toronto Stock Exchange. Now, I can still buy and trade through Charles Schwab on Toronto Stock Exchange. There's some fees and taxes I have to pay. But look at this. They're operating they're giving out a 5.2% dividend. So that's well above my 4%. And they have also been around for at least 17 years, and they're qualified from my very strict criteria because they're a div 0. Every year that they've been reporting in the last 17 years, they have increased their dividend per share. So if for those of you that are looking at maybe investing, this is a company to think about because you're going to get a dividend rate that's better than inflation, and it's a pretty safe company. If they've been doing this for 17 years, they're probably going to keep doing it. So it's a relatively safe place if you're going to be doing some investment. All right. So that's what I mean by the really strict criteria that I use. And this is the way I analyze, and we'll talk about companies moving forward because I'm pretty hard on folks when it comes to where I'm going to put my money. Yes, Chris, very important point, Chris. I am not a financial advisor. I am not certified, licensed, or anything else. This is just the way the shark does it, right? So, take that as a good warning. Okay, now the last company that I'm going to talk about here, because it has a tie directly to me, is this company, NextEra. That's either NextEra or NextEra. Their yield is 4%. So, that's in the area that I'm willing to consider, right? 4%. And that entry point isn't that bad, $78, $79 per share, as of mid-December anyway. Now, they haven't been around for the full 17 years, but they are a div 0. So this is a company that I'm thinking about. By the way, I do not own stock in any of these companies we've talked about. I'll let you know if I own stock in anything when we talk about it. But here's what's really cool about NextEra. One of their subsidiary companies is the company that I get my natural gas from. So, I'm kind of like, hey, if I buy stock in that company and I'm getting dividends from that company, then the more gas that I buy, the better I'm going to do. So anyway, yeah, it's just sort of a weird way to look at it. All right, so that we're going to look at different companies that operate in and around our industry, right? So sometimes we'll look at mining companies, sometimes we'll look at waste hauling companies. Sometimes we'll look at companies that represent the consumers of the stuff that we're trying to scrap and what have you. It's just a different way of looking what's going on in the market around us and what the influences are on us as scrappers. I certainly don't expect that you guys are going to go out and buy stock based on what I tell you, and I sure hope you don't, right? I sure hope that you're more careful than that when you're looking at stuff that you're interested in investing in, because you can lose everything, with investments. That's why I am so boring and careful when it comes to where I'm going to put my stuff. I want to just, before we jump over to Scrapping Irish's stream, I just wanted to throw out a really funny comment that I got. Now, this was actually from a video that I did back in October. And I got such a chuckle out of it. I've been meaning to talk about it. And this is when I wanted to talk about it. I did a video back in October, and I found some Legos street scrapping. And Dr. A, he dropped a comment where he said, my kids loved Legos. I did the math once. I think it averaged 7 cents a piece. They may be more now. They're very expensive. So as we get ready to wrap up and jump over to Scrapping Irish's stream, and maybe we'll go ahead and throw the discussion over at with Scrapping Irish as we get there. How many of you have bought a lot of Legos or are still buying a lot of Legos? And have you ever done the math to figure out how expensive they are? Maybe Legos are worth more than gold. Hey, everybody, I had a blast, man. I had a lot of fun doing this. It was my first time, so I really appreciate everybody that came in. And please send me all your comments about what I can do to make this more interesting, to make this more fun, to get you different information. We're going to be talking about platinum and palladium and other industrial metals and other companies and stuff like that. So, whatever you're interested in, please drop me a line. I really appreciate it. I'm going to work on making this better. We're going to do this every Sunday for about an hour just before going into Scrapping Irish's live stream. And I look forward to, sharing more of this with y'all as we go forward. So, my buddy buys Lego box sets. Oh, wait a minute, Cruiser, very expensive. Yeah, Cruiser. Urban Prosper. How is it that I haven't got that shark tooth implanted yet? You know what? I got to show folks that. That's funny. Yeah. We're going to show that one time. Simon, I don't know, but I'm going to make a note of your question, and I will try to find out what we can find out for the price of recycled plastic. Simon, what is the price for recycled plastic? I used to have a guy that would buy my HDPE, but he went out of business. So I do not have a plastic recycler right now. So we'll see. We'll see what I can come up with there. All right, everybody. Thanks a lot. I'm going to go ahead and shut this down so we can go over and join Scrapping Irish, who should be kicking off in just a few minutes. I'm going to refresh my coffee so that I am good to go when we get over there. Thanks again, everybody. I really appreciated you being here, and I look forward to seeing you all over on Scrapping Irish's live stream. I would say, Ralph, what is Ralph's favorite saying? Ralph, what do you all say when you get ready to close a stream? Ralph, come on, Ralph. Come on, Ralph. What do we say? I'm waiting for it. I'm waiting for it. Ralph has 2 minutes to put the words in. There you go. Later on, everybody.